Hey class, this week we are talking about accounting and finance, and I hope you guys are doing well. So the company, once again, that I chose was Joby Aviation, and a couple of their assets are their stocks. They have some properties and equipment. Some of their properties are like their engineering facilities and their hangars. They kind of get to test out building their aircraft right there in the big hangars and other compartment areas that they have. And they can also go to a strip that they kind of own. No, it's kind of abandoned, and they can test their projects there. Some of the equipment they have is obviously some of their nice tools. They own welders, big battery powered plants, so they can make their ion batteries. So they definitely have some expensive assets. Their liabilities, though, they have payable accounts, leases, stockholders, so they have to pay a lot of leases and insurance, stuff like that. So for their cash flow, they've been spending a lot on their designing and testing. They have come up with designs and have actually created some aircrafts, but it's been super expensive, and currently it hasn't caught on, so people are still kind of afraid to switch to the battery powered flights and the aircraft, so it's kind of tough to make money currently. They have sponsors to bring in money. They also have business partners, so they get along with Tesla, Delta, NASA to try and start the new battery-powered VTOL and get that kicked off. So it is expensive, but they do have some people helping them, and these pictures kind of show from their forms that what they spend their money on and how they get their money. And some of their revenue and expenses, since they're still testing a lot, they aren't actually making any revenue. Costs a lot in parts and in trials. Insurance is expensive because obviously some of their tests fail, so it's safety and liability. And they're trying to get clients. People just aren't buying it, so really all they have is expenses. They aren't really making any revenue. So currently they're at a loss, so they are not making any profit, and their stocks are pretty low. There's two quotes from the book. One is, a successful small business will do well to consider, therefore, that both positive profit and positive cash flow are essential for continued operations. As indicated in the opening quote, the two do not necessarily go hand in hand. Each is necessary, but not a sufficient condition for the survival of the business. And then also, having more money coming in than going out does not mean a business is healthy if the revenue shows only on financial statements and not in the bank account. So basically, you have to show that you are getting money by putting cash into the bank. And it's just, important to build clientele and try and keep your expenses low so you can earn some more money. Thanks, guys. Have a good week.